This is Rebecca with the Cat and Rebecca Show, Keep It Real Estate, and we're with Brian Kavanagh, the Franklin Loan Center, and we're going to go over reverse mortgages. So I'm going to be 60 soon, and I'm looking at retirement hopefully, and talk to a client who's going to be 62, as you need to be 62 for a reverse mortgage, and it wasn't something he was thinking about as an option as part of his retirement planning, so I thought we should talk about it today.
Okay. Well, first I'm just going to mention what a reverse mortgage is. Okay, we've been talking about all these other loans, and we're going to call those forward loans, forward mortgages. Basically, I'm the bank. I give you money. You make a payment on those. We pay it off. Everything moves forward. Reverse mortgage, I'm the bank. I give you money, but you don't make any payments. Instead, what that payment would be just goes on top of the loan balance, and it builds up every single year. So it's reverse of the other loan. No payments are being made. Okay.
So now what does it take to qualify for a loan, a reverse mortgage?
3 basic things that we look at. We look at your age. You have to be old enough to qualify. We look at your zip code, where the property is. That's based on loan limits. And we look at the equity in your house. You need to have sufficient equity in order to do it. The younger that you are, 62, we'll say that we're only going to loan you so much equity of the house. Whereas if you're 98, we're going to loan you a lot more equity of the house, because you figure your longevity of life is going to be a little bit less and more. And these loans are good for your life, for the rest of your life, as long as you live in that house.
So I guess the other part of it is we're talking about somebody who's already in a residence, but if I have a big, huge home and I want to downsize and I take that equity and put it down on a home, can I purchase a home with a reverse mortgage? Okay.
You certainly can. The idea of this loan is it is the last loan that you're going to have. So they're a little bit more expensive. Most FHA loans are insured by the federal government, FHA. So they charge all of their insurance fees up front. Okay, so it gets a little expensive on the fees. Okay, but it's for the rest of your life. You never have to do this again. I like to call them more of a quality of life loan. Okay, these are not for everybody, and not everybody would want one. Okay, it's going to eat up your equity over the next few years for the rest of your life. And so what you have left in the house is going to be smaller than just leaving a free and clear house to your heirs, your children. Okay, not every senior wants to do that, but every senior should be able to eat and keep the heat on. So this allows you to go ahead and take your equity that you've built up over the last 70 years or whatever the case is, and use that for your own life. Quality of life. Your cash flow increases. You can actually pull out money in several different ways that you don't have to pull back. You can either pay off your current mortgage, you can get a lump sum of cash to live off of, you can get a monthly tenure or a monthly paycheck basically coming in from your house that you don't have to pay back.
So now if I'm the unfortunate senior that I get a reverse mortgage and only have it a few years and I pass, what happens to what might have been remaining equity?
Well, that equity goes to your heirs as long as you willed that off to them or they go through probate or whatnot. They get your house. Remember, we're a bank. We just lien the house. We do not own the house. It's your house to do as you please.
So while I'm in it, I'm only using for the portion of time that I'm in the home for that amount as it increases and basically moves in that reverse direction. It just increases the amount of debt against the home.
That is correct.
And then the balance, if there is any, would go to the heirs.
Correct. Whatever the equity balance would go to the heirs. They have so much time to go ahead and sell the house or refinance it into their names. Typically, as soon as someone passes, you're going to go ahead and let the creditors know what's going on, and they'll give you a certain amount of time to go ahead and sell it, which you can extend over and over if necessary.
Well, if this sounds like something that you might have more interest in, because again, every situation is different, you might want to call your lender or contact Brian. And this is Rebecca with Keep It Real Estate.